A tiny 1% move could ignite the biggest crypto rally in history. All right, let's talk about this. So right now we're going to be focusing on the market cap instead of kind of anything Bitcoin or XRP specific. We can take a real quick peek at them, but that's not what the main kind of purpose of this video is. So we're going to take a quick peek at the market cap. So we see it's around $2.26 trillion right now. We were at around $3.2 trillion, and we've lost a lot of liquidity due to a ton of things that I've been speaking out in my videos. But the main idea is that we were at around 2.26, $2.3 trillion in market cap. And we have seen up to, I think, around 4, but in the 3s and close to 4 in the 2s. And so think about that for a second, how we're at $2.26 trillion right now in market cap. Okay, so BlackRock flags Asia as potential $2 trillion crypto market catalyst. By the way, $2 trillion is about what we have in market cap right now and all of the liquidity in the crypto market. So think about that for a second. Okay, so Asian household wealth could become a powerful catalyst, which we need a catalyst right now, guys. A huge catalyst would bump the crypto market insanely because right now we have no catalyst. That's why nothing's happening. For digital assets, if investors redirect even a small share into crypto, specifically 1%, according to a senior BlackRock executive. So speaking at Consensus Hong Kong, Nicholas Peach said that a modest 1% allocation within standard portfolios could potentially translate into trillions of dollars in market inflows, specifically $2 trillion, pretty much the market cap we have right now. And just taking a low where we're at 2.26 trillion, where the market is down significantly, we said let's call it 2.3 just for numbers, and we got $2 trillion. We'd be at $4.3 trillion. That means pretty much everything would double. Bitcoin would easily go to 120, 130. Honestly, probably more, but 150 on the conservative, 200. That would bring us easily to 200 just with this 1% allocation within investments and portfolios and all that type of stuff. So it's crazy to think about how much this would help the crypto market. It's only 1%, guys. So he noted that such inflows would equal about 60% of the current digital asset market, highlighting crypto's growth potential. So BlackRock's Spot Bitcoin ETF launched in January 2024 and now holds $53 billion in assets. So Asia is increasingly driving global crypto ETF adoption, with investors contributing significant capital to U.S. listed products. So regional markets such as Hong Kong, Japan, and South Korea are expanding crypto ETF offerings amid evolving regulations. So Peach emphasized that investor education and portfolio strategy are key to translating access into meaningful crypto allocations. So Asia and all these other markets and all these other countries are starting to kind of get into crypto. They're dipping their toes in the water. And so if we see this continue to happen, which I believe it will, as crypto becomes more of a whole world thing and it's more adopted across everywhere where crypto, XRP, Bitcoin's adopted into kind of infrastructure, financial infrastructure, banks, all that type of thing in the long-term run, years down the line, 10, 15 years, even in the big scale things, 50 years, where we see XRP, crypto, Bitcoin, everything's so widely used across the world, we will definitely see Asia and all these huge markets and this huge amount of money come into crypto. So if Asia, which they're dipping their toes in the water right now, $2 trillion, guys, just 1%. You think about that. Obviously big companies and big markets like to diversify their investments. And so when you think about this, guys, when you think about Asia diversifying its assets, 1% out of the 100% that they have, 1% going to crypto, they're just diversifying their assets more. And so they would want to spread it out along crypto, stocks, gold and silver, all those type of things. So seeing just 1% going to crypto, guys, it's realistic. It is 100% realistic with these huge markets and huge companies. Okay, so a small allocation with outsized impact. During a panel discussion, Peach, head of APAC iShares at BlackRock, highlighted growing institutional comfort with crypto exchange traded funds. Some model portfolios, he noted, now recommend allocating 1% to cryptocurrencies as part of a diversified investment strategy. So it's growing momentum that a little bit of money, a little bit of your investment and some of your assets should be in crypto. Some of the liquidity from your personal investments, especially in these big companies that we're talking about right now in these huge markets, should be coming to crypto. And it's getting more comfortable where companies are like, okay, yeah, we can have about a 1% in there, 2% in there. That's okay because we're diversifying our assets. We're putting just so small amount of our liquidity into these things that's diversifying our investments. So that's also nice to think about. That is 100% possible that just 1% out of 100% could go to crypto. Even less than that, 0.5% it would still bring in, talking at the sake of this video, $2 trillion would still bring in $1 trillion just of pure liquidity. So although the percentage appears limited, the scale of capital behind it is substantial. For context, Asia holds roughly $108 trillion in household wealth, Pete said at the event. Therefore, a 1% shift from that pool would amount to nearly $2 trillion entering the crypto market. Just pure liquidity, the crypto market would go absolutely nuts, guys. To put that figure in perspective, he compared it to the current size of the digital asset sector. Based on his remarks, such inflows will represent around 60% of the market's present value. Through this example, Peach aimed to illustrate how even conservative portfolio adjustments of even 1% could meaningfully influence the industry. The emphasis, he suggested, is less about aggressive adoption and more about incremental reallocation, which is basically saying that they don't need to put 10, 15% of their liquidity into crypto for crypto to kind of surge and for their investment to be successful and diversified. They just need to put just a little bit of amount. A little bit goes a long way, guys, especially if we see kind of markets, companies getting more comfortable investing in crypto. If each company puts in a little amount, it'll sum up to so much. And we see this, even 1%, $2 trillion, ton of companies pulling a little bit of their money into the crypto market would present a ton of liquidity and a huge boost in the crypto market. So BlackRock's expanding role in crypto ETFs. Meanwhile, this broader conversation around allocation comes as BlackRock deepens its presence in crypto-linked products. The firm's iShares unit remains the world's largest ETF provider and has played a key role in offering regulated access to digital assets. Notably, in January 2024, BlackRock launched its U.S.-listed spot Bitcoin ETF known as IBIT. The fund quickly attracted strong demand and now manages nearly $53 billion in assets. Peach described IBIT as the fastest growing ETF in history. Its rapid expansion reflects an increasing institutional appetite for structured, regulated crypto exposure. And this is a growing sentiment around a ton of companies and a ton of kind of whales, people who have a ton of liquidity just sitting there and they have it on the sideline looking to put it into somewhere. It's growing momentum, guys. However, he stressed that the growth story is not limited to the US, as we see that Asia, a ton of other countries, Korea, for example, is in the crypto market. So Asia's rising influence in ETF adoption. Building on that point, Peach highlighted Asia's growing contribution to global crypto ETF flows, noting that investors from the region account for a meaningful share of capital entering US-listed products. Okay, so more broadly, ETF adoption across Asia has accelerated in the recent years. Investors are using these vehicles to gain exposure to equities, fixed income, commodities, and digital assets alike. This growing familiarity, sorry, that's hard to say, guys. Excuse me if I said that wrong, with ETFs can provide a natural pathway for further expansion in crypto-linked products. At the same time, regional markets are advancing their own offerings. Hong Kong, Japan, South Korea are moving toward launching or expanding crypto ETF products, with further progress expected as regulatory frameworks become clearer. And we know that right now, a big part and a ton of these cryptos are focusing on the framework and the future, kind of their roadmap. And as this gets clearer and these people with a ton of liquidity, these countries with a ton of liquidity know the framework, know what's happening. Things are more clear, more certain. They're going to put more money in. And these trillions of dollars coming into crypto, guys, it could be realistic. I'm not saying this is going to happen tomorrow. It won't. But down the future, years down the road, when a ton of these countries have just a little bit of their money, and also companies, markets, all this type of stuff have a little bit of money in crypto, crypto will explode, guys. And it's the big picture is that crypto is becoming more widespread. It's becoming more accepted. People are more comfortable with it, so that's good that sentiment is kind of growing, and that someday these companies, these countries won't be as scared to put just a little bit of money to diversify their assets into crypto, which would explode crypto in a very good way. So thank you guys for your time. That's all I have for you guys right now. Remember, if you like what I'm doing, please make sure to like, comment, subscribe, share, and thank you guys. Have a great day.